The story of Bitcoin begins with a mysterious figure known only as Satoshi Nakamoto. This is the pseudonym used by the individual or group who created the world's first decentralized digital currency. The first public step was a white paper on October 31, 2008, titled Bitcoin, a peer-to-peer electronic cash system. It was posted to a cryptography mailing list. It described online transactions without a trusted third party, like a bank, a new form of money secured by cryptography managed by a distributed network. On January 3, 2009, Satoshi mined the first block on the Bitcoin network. This inaugural Genesis block, Block 0. Embedded was a message. The Times, 3 Jan 2009, Chancellor on brink of second bailout for banks. A nod to the financial crisis, marking the birth of Bitcoin, the currency, and blockchain, the technology. For days, Bitcoin was a closed system, Satoshi the sole participant, with no market value. This changed on January 12, 2009, 9 days after Genesis. The first transaction between two people took place. Satoshi sent 10 BTC. The recipient, Hal Finney, computer scientist and renowned cryptographer. Finney downloaded the software on release day and began mining. The transfer proved peer-to-peer payments worked, exactly as the white paper described. Finney announced it on Twitter, running Bitcoin. Months passed without a fiat price, until October 5, 2009, when New Liberty Standard posted a rate based on electricity costs. Marty Malmi sold 5,050 BTC to New Liberty Standard for $5 via PayPal, about $0.999 per BTC. Informal, person-to-person exchanges, but a crucial step toward tradability. These early actions established Bitcoin's first links in a growing transaction chain. Technical milestones led to the first real-world commerce moment: 2 pizzas. For over a year, no one bought a tangible good from a business with Bitcoin. That changed on May 22, 2010. Now, Bitcoin Pizza Day. Florida programmer Laszlo Hanyecz, an early miner, made it happen. On May 18th, he offered 10,000 BTC to anyone who would order, pay for, and deliver 2 pizzas. He even listed his preferences: pepperoni and standard toppings. Days passed. The idea was novel and logistics tricky. Some miners valued the 10,000 BTC at around $41, reasonable for 2 pies. On May 22nd, Jeremy Sturdivant, Jerkos, accepted. He ordered 2 large Papa John's near Hanyecz and paid by card. Hanyecz sent 10,000 BTC to Jerkos's wallet in return. Proof posted. The first commercial purchase with Bitcoin. Worth about $41 then, hundreds of millions at peak, cementing Bitcoin's leap into real commerce. After the pizza buy, 2010 prices hovered at mere cents. The community was small and technical. In February 2011, Bitcoin reached $1 on Mt. Gox, a psychological milestone. Media attention drew speculators, fueling the first big bubble. By June, it hit about $32. A security breach and bursting bubble sent prices plunging. By November, roughly $2 per coin. In early 2013, the Cyprus crisis attention spiked Bitcoin to about $260, then down near $50. In autumn, Chinese demand and venture capital drove another surge. By November 2013, it crossed 1,000, peaking near 1,242. A prolonged bear market followed, lasting over a year. Post-2014 correction, infrastructure matured and capital entered. 2017, retail frenzy, media coverage, and ICOs drove a near-vertical climb. 5, 10, 15,000. It peaked near 19,783 as U.S. futures launched, signaling legitimacy. Euphoria turned to a severe drawdown, over 80%, to about 3,200. Yet the network ran flawlessly. Development continued. A new bull began in late 2020, this time with institutions and corporations. MicroStrategy and Tesla added Bitcoin, PayPal and Square integrated crypto services. It surpassed the 2017 peak, hit about 64,800 in April 2021, and nearly 69,000 that November. Bitcoin had entered mainstream consciousness. One fundamental driver of value is built-in scarcity. The protocol caps supply at 21 million. It's written in code, and change requires overwhelming consensus. Unlike fiat that can expand, risking inflation and devalued savings, many call Bitcoin digital gold. Roughly every 4 years, miner rewards halve, from 50 to 25 in 2012, 12.5 in 2016, 6.25 in 2020, and so on. This programmatic reduction creates predictable supply shocks, often preceding bull runs. Adoption by individuals, corporations, and even nations has accelerated demand. As more people hold, use, and invest, network effects strengthen and liquidity improves. Moves like Tesla's acceptance, if temporary, and El Salvador's legal tender step expanded legitimacy. From white paper to trillion-dollar asset, Bitcoin's rise is innovation, community, and evolving value. It began with the enigmatic Satoshi paper on October 31, 2008. Network launch January 3, 2009. Satoshi was the first miner, the first sender, the early guide. The first to receive Bitcoin peer-to-peer was Hal Finney. 10 BTC from Satoshi on January 12, 2009. The first dollar exchange rate emerged in October 2009 via New Liberty Standard. Primitive, but a price. The first famous purchase. Laszlo Hanyecz 10,000 BTC pizzas on May 22, 2010. From under a tenth of a cent to global milestones, rallies and crashes expanded the user base and hardened the network. Each cycle brought developers, investors, and businesses, maturing the ecosystem. Today, as of 2025, Bitcoin leads crypto as a recognized global asset, scarce, decentralized, and programmatic.